The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this beautiful day here in Boston area. Just a spectacular day. Would never think that it is February the 1st. Probably in a few days' time we might, but right now we don't. And let's just go to the numbers. Thank you for our hosts, wonderful hosts here at TFNN. Let's just go right to those numbers. Dow's down 76 at 16,390. The S&P is down 8 at 1931. Comp index is down 11 at 4802. At this point, we've got the volatility index up only 58, up 2.87 at 2078. But it's in leg A, and it looks like it's going to fail by the end of the day. We'll see. And in the meantime, we've got the E-minis down 8. In leg C, it needs to go above 1933 to continue leg C. And if it fails under 1932.75, that will make a peak C. Monthly chart has had a really spectacular move. And if it's able, the E-minis are able to get to the 1937 area, then all of a sudden you're looking at the 9-period exponential moving average of 1952 in the weekly chart as a potential target on the way up. In the 120-minute chart, it's worth looking at just for a moment. This is what I show my subscribers to my opening call right here. Just a very steady stair-step move to the upside in a very big cup formation, very large. This is, of course, a 120-minute chart. We're talking about very large. We're only talking about January the 7th-ish, 7th and 8th, those highs at 1964, making a deep dish cup. 1804.25 was the low on the 20th. That was the day that we went long at 2:15 in the afternoon for subscribers, actually triple long. The Dow, we've been adding to that. And so in the meantime, back at the ranch, what we're looking at is nice stair-step move. So for the consolidation from the round number 1933 high that was made on at the close on Friday, holding very steady, went down to 1912.50, kind of bouncing. I suspect that this is the period of consolidation that we should expect after quite a spectacular move to the upside. Let's get out of that, move it away, and just keep running through the numbers. Gold is acting very well. At this particular point, let me put this into the corner right here. So let me show you what we've got. We've got daily, weekly, monthly is the future, so there isn't that much history to it, and 120. But now look at this. I mean, let me go to the QQQ to just resolve everything. This is leg B in the QQQ. It extended 104.17. Today went to 104.19. Very nice action extending leg B. We're already in C in the Dow and the S&P. And this is not great action, but it's very nice action on a daily basis. I'm still looking at this as if the monthly chart. Now we can talk about Roman candles. We'll talk about a little today and tomorrow. In the meantime, back at the ranch, the QQQ series is down 11 cents at 104.02, acting quite well on the day. The weekly chart is good, but this is not leadership at this point. We've got the Dow that's really more leadership. And finally, I just want to do the IWM. IWM is the Russell 2000. This is at a very strong leg up. That was a good move on Friday, finally caught up. But like the New York Stock Exchange, these are the laggards. And the candle, the Roman candle, second Roman candle that we made in the monthly chart says, now you've got to be really careful, because if the IWM starts to trade into the 99.50 or lower area for about a week, then we're probably going to be retest the low of January and go down to the 95.06 level. So this is very important right now. I wanted to go to gold, and gold itself is, the contract's up 10 at 11.26. Made a leg E, could be a recycle at this point because it's a third bar after the peak D. Weekly chart is looking very good, and the monthly contract, this doji candle, I spent a lot of time last week talking about this doji candle. I didn't make a big deal of it for my subscribers over the weekend. I sent out over a dozen charts looking at all the different pictures and what there is a potential for, looking at the general stock market. But gold itself, because we are long in particular gold stock, it's doing really well. I don't know if it's up 10%, but it's up very nicely. And that basically is our gold area at this particular point, because we've got a pretty diverse portfolio. Let's just go on to silver. At this point, silver is down. Why should I say down? Silver is, in fact, there it is. Silver is up 10 cents at 14.35. Now, this is going to be very interesting, because I was looking at high-grade copper over the weekend, and it has held very... No way. Did I just do that? Oh, big mistake. What was I talking about a moment ago? I said that was silver, right? So have I lost now the silver chart? Oh, give me a second. I don't want to mess this up, because these charts are very important to me. I need to go back and go SI. Oh, thank goodness I remembered what it was. I did this last week. Couldn't remember what the other letter was. Okay, so I'm going back to copper right now. High-grade copper, HG. The continuous contract held the 9-period exponential moving average today of 2.03, and it's trading at 2.04. I think that the commodity index, remember we spent a lot of time on the TRCCI Reuters commodity index. I think there's a bit of a change here, and this is a change you have to respect. So let's just go back now to the commodities. We're looking at crude oil. Crude oil right now, down quite sharply, down 5% at 1.68. It's trading at 31.94. Made a peak B. Remember, that's the one area I said, I just don't think I want to be messing around with crude oil. There's so many other things that are acting quite well. So crude oil pulling back. We'll see how it holds the 31.50 to 31 area if it pulls back any further. Now I want to go to the bonds. TLT. TLT is acting quite nicely. It's down 71 at 126.59. Look how well it's recovered from that pullback when it went from the 128s down to the 118 area, and now it's gone from the... This is a peak D right here in the Chapman wave with a cup formation, which says, now it's going to say to me that if bonds, the TLT, 20-year Lehman T-bond fund, pulls back and it goes into the 125s to the 124s over the next week or so, this could help our stock market. Just that mirror image relationship might be there. So I'm going to be watching it real closely. The fact that it ran so well on Friday with the stock market up almost 400 points, that was amazing. But of course, that is part of what I call the Japanization of our bond yields. What am I missing? I'm missing the dollar. Very important, because we want to look at the dollar and say, hey, dollar's pulling back 55 cents after making leg D. Now, this could be a peak D in the daily, and I think it's even more important right now than the weekly, because the weekly obviously is going to be moving in conjunction with the trend of the shorter term, which is daily. So if I look at this, look at that. You've got an arch formation potential here. I just think that the dollar is now in a kind of it's still been in a trading range with a high of 100.51, a big challenge, and a low of 97.19. It's just stuck in this range for now. I think it can do that while the stock market has a little bit of independence, and I think we've covered a whole chunk of things. I'm going to be coming right back with Georgia, New York, and Scott and Safety Harbor. If you guys can hold on, we've got a break coming up. Nice move up in the E-mini right now. Let's see where it is in the 1-minute chart. Yep, looks like it's going to retest the 19.2625 high of just 10 minutes ago. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. And just, Julie, real quickly, because I think you might be in the USO, just be real careful. The reason why I didn't want to put it into my newsletter, earlier on at 8:50, I was thinking we'd get it. But then I thought, crude oil is still a problem. Excuse me. Crude oil is still a problem. So just be very careful there. It's unlike gold at this particular point, silver at this particular point, and some of the other commodities. So I'm just saying to you, you don't have to get carried away. You don't have to say, oh, my God. Man. Just there's a trend line support right here. Maybe it's a little too much for you because it's down 5% already. But right here at 9, why is my voice suddenly crackling? 9.03, 9.04. That's where I'd be careful, because if it takes that out, then it's making an arch formation. So just put a stop in a part of the position and just deal with it that way if you're along. Let's go to George in New York. George, how are you?
Basil, good morning. How are you today?
Good morning. I'm well, thank you.
Good. Today I wanted to look at Monster Beverage.
Okay. So this is George had brought up Monster Beverage a while back. He had discussed it, and he wanted to. He was looking at it as a potential, based on his analysis, that certain levels of support need to hold, and that's what he wanted to look at. Monster Beverage trading MNST up 2.62 at 137.65. Now this is going to be very interesting. If you don't mind, George, I just want to take a moment here. And I want to put in space to the right. Let's give it 18, just to show, oh, wrong one. Space to the right. Actually, you know what? You can just tell me a little bit about what you're thinking while I have a sip of tea. For some reason, I got a little throat crackle. So you just tell me what you're looking at, and then I'll do the analysis.
Well, as you know, I'm long Monster Beverage, and I've been long Monster Beverage for quite some time. And as of last April 2015, Coke took a 16.7% position in Monster Beverage. And what Coke did with Monster, they made an arrangement where Coke's energy drinks would be transferred to Monster, and Monster would transfer their natural juices, natural teas, and carbonated natural sodas to Coke's division. So with that, Monster became the energy company full force. With that said, we also get Coke's massive distribution channel, which has started last year going into Europe and Japan. And that's all fine and good. But here's where I'm a little concerned, of course. The stock is trading up again today. What's happening is because it's a major grower of earnings and sales, I think it's getting a little ahead of itself. And
So, George, you mean just the bounce that it took from Friday till now?
right.
Yeah, okay.
Not even Friday till now. What it's been doing since last year where it hit a high of 160, and now it's been retracing, and it's back down to the 135 level.
Having hit 128.53 on Friday, yes.
Right. So, based on my analysis, going out 2 years, the company's definitely worth about $178 on my analysis.
Okay.
Presently, I have to say the truth, it is about a $98 to $100 stock, you know? So what's happening now is it's moving a little fast for itself. But, again, they are having earnings the end of this month. And what's not said is, if you look at their balance sheet, their current assets to the liability, they are running 7.44% to 1, which means they're cash rich. So what we don't know is what they're going to discuss at their Q4 earnings report, because they have to tell us how they're going to deploy the cash going forward, because they have no debt on the books at all, and the company has quite a lot of cash built up. The other factor is there's only 202 million shares floating, and there's only a 1.89% short ratio on the company.
Oh.
So all of that is very good for the company. Now, the bad part. Friday, a research report came out around 1 o'clock in the afternoon, and that was from Citron Research. And Citron Research was touting that the stock is about an $80 stock, it's worth, presently. And he cites why, and he gives his argument as to why it should be an $80 stock. But what he's doing is he's comparing Monster Beverage to Coke, to Pepsi, to Dr. Pepper, and to Green Mountain, the coffee brewers.
So is that really fair? Because there are major, long-term companies that go back decades, and this Monster does not do that. And it's also, Monster is kind of, it's really, in a way, it's a different kind of company, right?
Right. So with that said, what you just said, let's do a quick check. Let's take Coca-Cola. The last 5 years of sales. Do you know they've decreased 0.8%?
They've decreased.
As opposed to Monster Beverage going up 87.58%.
Huh.
Pepsi, the last 5 years, is 3.01% on sales versus 5 years ago. Versus, again, 87%.
Well, but that is also because there's been a major trend change. When you go to the supermarket now, you can't find plain anything. So everything, there's a flavor to everything. And within the category of drinks, it's just, I mean, you could close your eyes and just point, and you'll be at some place where some counter or some shelf where there's a whole variety of drinks. So the way I'm looking at it, though, is that I think that whole area is saturated, and it's purely business models that are going to make the money now. And then one will come out the king. It might not be the best, but it'll be the king because of marketing and a whole bunch of things. It seems to me from the chart that I'm looking at, I've got it. I wanted to just mention to you that on Friday I had something that I call right here, and it doesn't happen very often, but it's what I call the volume spike is called the Chapman Wave Volume Price Climax. To me, that says that there should be about a month and a half, 28 days of upward movement, as long as the price doesn't go halfway into the candle of Friday, which would be around about 132.50. If it takes that out on the downside, then this is probably not going to work. But the way I'm looking at it, there should be a large arch formation. It doesn't tell you how high. It doesn't have to go all that high. But what it does say, this volume spike says that the test of 128.53 might not come until maybe March. That's the way I'm looking at it, if this is a correct analysis based on this particular technique that I've developed. But I think in your case, I would let it just ride a little bit further and see if a monster can get to 141 to 143. And at that point, give me a call and let's look at it again, because I'll be able to tell whether there's further upside or whether you got to be careful because it's going to come down and retest.
Very good. I greatly appreciate
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and the Dow is now only down 55. S&P's down 7. Ooh, this is a very interesting thing because there was a lot of bearishness going into the open. Nice action that we're looking at. Let's go back to Scott. We got Scott in Safety Harbor, Florida. Scott, how are you?
Good. It was a good call that you made last week on Alcoa. It was kind of, I don't remember exact situation, but it was a situation where you were right and I was right.
Great. I like
So
that.
all worked out correctly.
Good. Today you'd like to go back to look at CX, is that right?
CX and Alcoa if we have time.
All
You
right,
said
so
you
let me
noticed
just
some
tell- let me
bearish
just say,
things coming into the market, but I don't think it's going to be. I think it's going to be short-lived.
Scott, I just want to say CX, tell the listeners, is CMEX SA. It's a cement company. We were looking at it as having made a low of 364 on the 20th of January. It ran up in 2 days to 458, big percentage gain. That was on the 22nd. Gives most of it
That was
back.
the part where you were right and I was right. You saw a pullback in CX, so I did hold off a little bit. I thought it was going to 450. So actually, I mean, I took your advice. I did wait. It did pull back into the 385 range, and then it blew up. So it was, thanks to you, I did even better.
Thank you very much. Now, I need to ask you, are you in it at all right now? Or you're just looking again?
No, I'm looking for a new position right at the moment.
Scott, I'd like to get to this to show you something very interesting. You see how it ran to 458 for peak A in the Chapman Wave methodology? Then it pulls back, and then it runs up. It looks like it's going to go to B, and B would have been at 4.59. Instead, it stops at 457. So now what we're looking at is if I had to draw an arch formation, I'd be drawing one arch, and then there's something that I call in the Chapman Wave, this is like a restart, but we don't really know yet whether it's a restart to get in now because it's the MACD is good and stochastic's rising, or whether it's going to pull back a little further. So I look at the 120-minute chart and CX trading at 429 down 24 cents. That's a big percentage. That's 5.5%. Made a peak D in what I call an inside buy mode in the 120-minute chart, and it's just gone underneath the 9-period exponential moving average. I'm going to suggest that this one, right at this particular moment, I would prefer, let's see if I can go to Alcoa to see if there's a choice between the two. Alcoa should be down a little bit. It is down 6. Now, this is very interesting. You see the chart pattern of Alcoa when it went from the low of the January the 20th, AA went to $6.14. Then it ran up very nice percentage to 7.42 on January the 22nd. So it goes to a peak A, pulls back, and then it makes a peak A again underneath the previous one, except it's holding the 9-period moving average on Friday, has a good day. Today it pops up, can't make it above the 6.8 level, 7.42 level of the 22nd. It went to 742. It went to 738 and it's pulling back. But even though it looks sideways, this is now a little bit better chart pattern than CX, just as chart patterns go. So on this one, I'd be more inclined to have a little, I would call it a nibble, and I would add to it on strength. I wouldn't add to it on weakness. So this is the 9-period moving average on Alcoa is at 716. That's just 6 cents away. And it's holding so far in a sideways move. I'm going to make the suggestion, I would prefer if the market itself, which is the Dow's down 60, the S&P's down 7, I'd give it like another 10, 15 minutes. If the Dow can go to minus 50 or better and the S&P can go to minus 6 or better, and Alcoa actually moves from minus 6 cents to minus 4 cents, saying, hey, I'm participating with the market, I'm pulling back with the market, I'm anticipating coming off the low, that seems to me to be a better trade. And I know that you look at this as like almost like a swing trade, a real quick trade to get your money and get out. I would say that's where I would start a position, and I'd prefer to add to it on strength rather than on weakness on Alcoa. But even here, you could nibble at 723, and I think if you had yourself even just a tight 4 or 5 cent stop, that should either work by 1 o'clock or it's just going to say, hey, don't be in this at all. So choosing between the two, between CX and AA, round about more or less the same price. Well, not exactly. Let me see CX. I can't remember anymore. Oh, they're not. 430 is different to 7 something. So yeah, the prices are different. But I think as chart patterns go, I think Alcoa, as a trade, Alcoa is the one. Scott, you there? Oops, I think he's listening. He's got, sometimes he has a connection that comes in and goes out. So, Scott, that's the way I'd be looking at it, and I hope that helps you. There we go. Dow's down 42, S&P's down 5.3 and 5 3/4. And remember that 1 minute chart we were looking at just a moment ago? Look at this. Brand new, A, B, leg B. Very nice. And there's your pullback to trough C. Nice action. All right. So that is Scott, and I hope that helped you, Scott. Now we've got a couple of things that we want to look at. Just go back to, I just want to see if there are any other, I did have a very interesting thing happen. I was given a book by an author on the Electoral College about a month or so ago. Met him and we were talking, and he said, I'm going to send you my book. And it's on, he's a scholar, he's a lecturer in Chicago, and his specialty is the Electoral College. He's a constitutional lawyer. And it was very interesting. And I'm going to, in the next break, I'll try to get the book and give you some details, because I think that it's a book that in this particular environment is going to become even more and more important. He has had 5 or 6 states take his recommendation of what he thinks in terms of the speed, etc. And I'll get back in a moment. Right now, I just want to do this with the Dow. Dow's down only 37. The S&P's down 473. Okay, now I want to talk about something that I believe is very important. I won't do it today. I did find the email with the specifics of the questions that I had about the Roman candle, and actually most of it dealt with short-term trading. Let me see if I can find any here. So in terms of you see, they don't happen that often. There's a Roman candle right there. You see that little Roman candle in the 10-minute E-mini chart on the 11th of January at 20:30. That's 8:30 in the evening. That one there didn't make the low. It was 2 before the low. And the reasoning, of course, with this, let me expand it. The reasoning in the Chapman wave methodology is that when you see that candle and it's on the way down, it becomes very bullish, but it could, if it's way off the top, and off the top, this is not a Roman candle. It looks like it, but it isn't theoretically a Roman candle, because you need to close halfway from the low to the high to make that actual pattern that I like there. And now what we're looking at, and this is not a very big one. I like big Roman candles. But in the meantime, look, it traded halfway into the wick. And then what happens if you trade halfway into the wick? There's a real good chance that you're going to go down to the chest of the low. And it did that. And then it started a brand new move on the upside. Now, the other thing is that when it's occurring way off the top, in this case, the top was at 1933, and this was busy happening at the 1922 area, it means that if you close above it for 2 out of 3 sessions, which you did, that's very positive. And look what happened. You ran all the way to 1929.50. Basil Chapman, Tiger Technicians Hour. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. I'm back. It's Dow's down 40, S&P's down 5. So this is the book. Let me see if I can actually show it here. Yep, there it is. The reason why I'm showing it is because it's so rare. I mean, to have, at least for me, to have the opportunity to read something at a very timely moment. It's called Taming the Electoral College by Robert W. Bennett, published by Stanford Law and Politics. And I got to be quite honest, I've read some of these pages over, God. In fact, I finished a fantastic book in the meantime called The Wright Brothers by McCullough. It's beautifully written. It's just a fantastic book. So it's God, those guys were unbelievable. They did it by themselves. They created everything they had to do, even design the motor. It was just an incredible, what a credible work. So I squeezed it in here because this is not easy reading for me. History of the Electoral College, and it's so timely right now to be reading it, because I think that the Electoral College is going to have more and more influence as we move along, or maybe not, we'll see, but it's going to be there. Let's go to George in Boston. George, how are you?
Hi, Basil. Thanks for taking my call.
My pleasure. We've got George in Boston talking about candles, remember, from last Friday. Hi, George.
Yes.
So, yes.
The reason I called, you were talking about looking at bottoms on the monthly candles for a few stocks.
Yes.
All right. What I was looking at, Basil, on the Dow Jones Industrial and also on the S&P 500, in the last 20 years, the candle that seemed to come up before the market was going to make another move up,
yes,
seemed like before any move, substantial move up, there had to be a monthly candle, a lower low, a positive candle with a lower low. Until that happened, the market didn't move significantly higher. And I go back, 20 years. If you look at the Dow,
right,
and you look at the S&P. So what I'm looking at now, I don't think anything's going to happen to the upside substantially until you get another a lower low with a positive candle.
So retest of the lows, not even the low that we made in 1540. You're already looking at the low of 1537, the August low. Is that correct?
Yeah. So if you go back 20, 25 years on the Dow and the S&P,
yes,
when you have a move from the top, say 1,000 points down, maybe more, maybe a little less,
right,
there's not a substantial move unless you see a monthly candle
Right.
with a lower low, a positive monthly candle with a lower low. Then it goes up.
Oh, so you mean you got a red one, then followed by a green one?
Yes. If you go back
So-
20, 25 years,
George?
Down, yeah.
Are you saying that the low that is made has to be followed by one candle that's probably red, but then it must be followed by a green candle?
No. What happens is that all you need really is that one monthly candle with a lower low, a green candle, lower low, and then from there it takes off.
Oh, like we made at on October of 2002, and then again we made.
Yeah, if you look, see, I'm looking here. I'm looking at, say, March of 09.
Hey, that's a very good point, and that's the same thing with the candle of October of 2011.
Yeah, if you go July 2010, October 2011.
So you're saying the
June
candle that makes.
2012.
Yep, I can see it now. Wow, good eye. And you're saying that the candle that makes the low, we got
Yes.
one right here on August of 1982. We're looking at the candle. Oh my goodness, George. George, I'm going to call you George Candles.
No, even if you go back, I'm going back now 2002, October 2002,
Right?
the same thing. You go
Okay.
back to
Right there, October of 2002, right?
right, and then even if you go back to my chart only goes back to 97. I'm going back to September of 98. It does the same thing.
So
And then you
that's
had
the
a
same
nice-
thing.
you had a
October,
nice
September,
move up.
October of 98, exactly the same thing.
Right.
Hey, that is a very, I've spoken about the candle of
Yes.
October of 2011 as really significant, an engulfing candle that made a
Yes.
low, closed at the
Yes.
high, almost at the high, and that
Yes.
became a major turnaround for all the indices, and almost all of them
You
have
don't
it.
even
And the
need that
question,
engulfing candle. If you go back to March of 09, it's not engulfing. It's just a lower low with a positive candle.
and a green, yes.
And it seems, so when you're looking here now, we've had a pretty good move down. I would be looking for that positive candle with that lower low.
I think you've got yourself something really interesting to watch, and you've backed it up with quite a number of candles. Not every single one, but almost every single one. You see, the one in April of 2005. It was the next candle that did it, but that one didn't. But I think you're onto something, and I'm going to be taking a good look at that. But here's the other thing I just wanted to mention while you bring it up, and that is, in the context that you're talking about, it turns out that on every decline, the only candle that made the low and turned into a green candle for a pretty decent rally, sometimes it was the low, but at least was the green candle.
Right.
It's very hard for candles to become green under these very difficult sell signals.
Right.
That was a peak F
It's
top.
like you said, it seems to like the last 20, 25 years, I think 9 out of 10 times, that's what you need before you get a decent move up.
Well, I'm going to put it down in my notebook here. I'm going to call it the George Low.
And the other thing, quickly, I heard Alan Ruskin on Bloomberg last week. He's like one of the heads at Deutsche Bank on reserve currencies.
Okay.
And what he's saying, and he's calling for another Plaza Accord, similar to 1985, because of the amount of money that the Chinese are using to support their yuan. They've used like $100 billion in the last 5-6 months. 513 billion in reserves, recently to shore up the currency.
So he's calling for what?
He's calling for a Plaza Accord that would stem the dollar from going much higher. As they did in 1985. 1985, the dollar topped out, around 160. Is that because they met on that Plaza Accord and they did a similar thing in 2002, where the dollar rallied up into support of the euro. So he's calling, and he sounded like this is something that they're going to do. This is a
Really?
guy at Deutsche Bank on the foreign exchange research at Deutsche Bank. He's the co-head. So for him to say something like that, I'd watch for that too. That like he says, a strong dollar doesn't help anybody. It doesn't help the other countries. You know, the ones that have natural resources and all that. It helps nobody. So he's calling for another Plaza Accord. So that's something you can watch. Maybe this dollar. No, if you look at a long-term chart, 1985, 2002, you're near the top. If you draw a trend line, Basil, so it might be something you want to look at.
Well, I've been talking about the dollar, yes, and what I've said is if the dollar goes to 100.52, it makes leg D, and that's the quickest it's gone from a B, C to a C to a D. Wow,
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. Yeah, don't forget, swim lessons coming up. And that's, I would say that is one of the specials that you get here, because that kind of information on options and strategy, that's really important for many of you. Take the opportunity. So we've got, let's see, we've got Brent from Martinez, California on the line. Brent, congratulations on that fabulous position you put on in FMSA, Fairmount Central, what is it, Central Holdings.
A chance to talk to you to the extent I wanted to on Friday. I didn't even tell you where I bought it or whether I was long anything. I Actually, I have 10,000 shares. I bought at $1.10.
Oh,
It
good.
was all part of a strategy I kind of put together, and I would like to talk to you more about it when we have, maybe a little bit more time. It's going to be, unfortunately, a little rush trying to talk
So
about whatever
I'll tell you what we'll do. You know what, Brent? Because you've done some fabulous entry points. How about I'm going to ask my engineer if it's okay. I usually do people. There's kind of a rule about calling 2 consecutive days. The third day would be fine. If you want to call tomorrow, I'd like to look at this because the strategy that you've put together and the structure of the chart is really something to be talking about because there are a lot of charts that are making this pattern right now. Would you be able to call me tomorrow and we'll take a whole segment and we'll talk about your strategy?
Absolutely. I'll do my very best, and if it's not tomorrow, it'll be Wednesday. Okay, Basil?
Good. Okay, folks, we've got FMSA trading at 244. You heard that Brent got in the low ones, the 110 area. It's a fabulous double. And I want to hear all about it. So we'll do that tomorrow. And I hope to hear from you. Otherwise, it'll be Wednesday. So far, it's acting fabulously. Pull back in the 120-minute to the 9-period moving average. Now it's moving up. Thanks, Brent. We'll speak to you soon.
All right, take care, Basil. Talk to you soon.
Thank you. Let's go to Ben in Tallahassee. I can get this in before we close out the show. Ben, how are you?
Very good. Thanks, Basil. So I missed your whole show, but looks like the weekly and the monthly are still on the SPY, are still looking pretty poor, with the daily obviously doing a great job to still yet make the peak or leg D. Anything on the weekly that gives you a vote of confidence?
Yes. Now, one of the things that we did this morning for my subscribers is I haven't done this before, but because I could not pick up moving the position that we have in the Dow, the 3 times long Dow, we went to the 3 times long S&P. Now, that might be taken out. I don't know, but we got in really early when the market was down almost at the lows. So I'm looking at this very positively on the shorter term. I can only go one step at a time. I have a target for the SPY, which is trading at 193.17. I can't do it right now, but I'm going to tell you the price I'd like to do. So 195.85 is kind of the area that I'm looking at, because if it's able to clear that, all of a sudden you've got the 196 level in the 100 in the weekly chart of the SPY, the 9-period exponential moving average. I love the fact that it bounced off the 200-period moving average. I'm treating this right now as if we're playing a long position, actually a very long positions in the Dow and the S&P, and we're trying to extract as much as we can from the long side. So we've taken off half positions and traded them. We've kept the core position. And the only reason is all the work I did over the weekend points to the fact that there could very well be a stronger and longer rally at this particular point, just based on the action of last month and that candle. I'm not dismissing it's another Roman candle in the SPY. But if we can see the SPY move into the 196 area, it must be this week, into the 196s, I think that I saw so much negativity that I believe that there could still be further upside, and that upside is really contingent upon holding 191 to 190 support.
So you feel that on the weekly that it could still accelerate past the 9 EMA?
It could. I think it could.
Okay,
so,
got it.
Ben, thanks so much for calling.
Yep.
Call again in another couple of days. Let's look at it together.
Thanks, Ben.
Folks, stay tuned for your swimming lesson and check my opening call.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.